Hi, thank you very much for coming along. We're here to talk about startup and publishing investment, and we've got a very diverse panel here today. So to my left is Henrik Verdelin, who is managing partner at Prehype, and to his left is Christoph Main, who's founder and CEO of Texta. In the middle, we've got Thad McElroy, who's from thefutureofpublishing.com. He's an electronic publishing analyst. And then with the glasses is Brian Rich, who's from a growth private equity firm. And then right on the left is Vala Vakili, who is CEO and founder of Small Demons. And to start off, I've asked them all just to do a very, very brief introduction about what they do, because they do very diverse things, and they'll explain it much better than me. So starting with Henrik.
Thank you.
Mike.
Do you have to hold it? Hi, everyone. My name is Henrik. I run a product development studio. Our core business is to launch new startups for larger companies. So we work with a large range of companies like Coca-Cola, Kaplan, Omnicom, those kind of clients. We have a studio here in New York, one in London and one in Copenhagen. That's our core business. We also incubate some of our own startups, and we do a bit of seed investment as well. We've done one investment in the kind of publishing space.
Christoph?
So my name is Christoph Meyer. I'm based in Berlin, Germany. I run a company that provides an alternative distribution platform for ebooks. We run the ebook platform on behalf of large manufacturers such as Motorola, Dell, Asus, Acer in 25 countries. I'm also a seed investor in a number of publishing companies, as I believe strongly in the space.
I'm Thad McElroy. I have a company called The Future of Publishing, a website with that name as well. I'm based in San Francisco and in Vancouver, Canada. I've been consulting for about 25 years, exclusively at the intersection of publishing and technology. Much of the work has been around software, services, hardware, a lot of startups. I've been involved in quite a bit of funding activity over the years, but again, most of it's been not content-focused as much as tools-focused. So I think that's the perspective I bring. I've been more recently very focused specifically in the book publishing space, which was my entree into all of this.
Afternoon, everybody. I'm Brian Rich from Catalyst Investors. We're based here in New York. We're a private equity fund. More specifically, we consider ourselves to be a growth equity fund, which means we're investing in companies that are in between venture capital and buyouts. So they're growth companies like new media businesses and the like. Our backgrounds, myself and my colleagues, come out of the media business, or specifically media finance. And so when you look at our portfolio today, we have mostly new media businesses as well as other verticals that are in the growth space.
I'm Vala. I'm the founder and CEO of Small Demons, a Los Angeles-based startup. We look to make books more discoverable by opening up all the details inside of them, every reference to a person, place, or thing inside of a book, and connecting all books together based on those details as well, something like a story graph.
Great. So I'm going to start with Thad. I was hoping that you could give us a kind of overview of what the different publishing media investments are like at the moment, what's trending right now, and how that might differ to, say, 12 months ago.
Sure. We had some discussion, of course, before we got started here by email. And I found myself cast as the naysayer, and I thought, oh gosh, what a role to be in. And so I've been trying to talk myself out of the naysayer role, and I have rehearsed a few Pollyanna statements about how much I love publishing, and it's great for kids, and literacy. Yeah, how about, yeah. But when I look at it just as a straight investment opportunity, I can't bless it. And why I can't is not because, of course, that there's not a heck of a lot of innovation, smart people, change and churn that's positive and exciting. Of course, that's going on, and that's why we're here today. That's why this conference is packed, because there's so many good people with great ideas. But let's just go strip it down to some fundamentals around this space. And take my site, The Future of Publishing, I look not just at books, magazines, newspapers, music, film, television, and across these industries, we don't see growth. We see a lot of disruptive opportunity, but it's not based on a really strong financial platform. One of the things I pointed out when Apple announced their disruption of the textbook industry a few weeks ago here in New York is that Apple makes an awful lot more money in one quarter than the entire textbook industry makes in a year, and it's an awful lot more profit on those sales than the entire textbook industry makes in 5 years. So for us to be, we're dealing in this little subsection. So is there still opportunity? Sure there is. Can money be made? Sure. A well-managed portfolio? Absolutely. But does the groundwork, promise that you're going to get VCs going, hey, give me a piece of that? No, you're going to have to fight for the investment dollars. And as I was discussing with a colleague just as we were coming in, you may have to give up a lot more than you want to get that money. It's going to be expensive money until you get a track record, and that's a tough road to hoe.
Okay, thank you, Thad. I think that's thank you, maybe not. But Christoph, can you give us perhaps the more positive perspective, as an investor and also as someone who's been invested in?
Yes, I must say I don't share your views at all. In the past 3 months, I think I've received 5 or 6 music-centric business plans, and I keep getting fascinated by the fact that people are going into this direction. The music industry is, for all practical purposes today, 6 to 7 times smaller than the e-book industry. There are a number of other parameters, such as lack of piracy and so on, which means that we are in such an interesting place, at such a moment of transformation, and of course, there will be 100 million businesses being built in that environment. What I see is that there is a state of hypnosis or paralysis due to the fact that there are a few players that are actually dominant today, but it's ignoring the fact that there will be growth and that there is opportunity, especially for people from outside of the industry, but also for inside the industry, to build new businesses.
So, Henrik, having worked with lots of different kinds of media, do you think that's true, that ebooks are kind of being overlooked as something to invest in comparison to other media?
Yeah, I think that's true. I think we come from the product development side and more the user-centric design side of the world, and I guess we don't see it as much as publishing because we tend to try to understand what is the core problem that we're trying to solve for the user, and then we try to build a business up. So, I've been on the board of a company called Issue for many years, who is a huge publishing site. They have 60 million unique visitors, 4 billion page impressions, and they operate that with 25 people. But I don't think we ever consider ourselves a publishing company, right? Even though they have millions and millions of magazines being uploaded to that every month. So I think there's definitely, to your concrete question, I do think there's, ebooks doesn't have like the sexiness of Spotify, right? And so I think there's definitely some kind of things being overlooked there. And secondly, I think, it's probably wrong to focus it so much in the center of the industry because I think there's a lot of publishing deals that are being financed. They're just not kind of labeled as a publishing industry. I would argue that Instagram is a publishing platform, so is Twitter and a lot of other things, but they don't fall in the realm of an ebook.
So, Brian, just in terms of what you do, you're actually trying to invest in companies that are already quite well developed. And what are you seeing in the market? Are you seeing that there are opportunities here for publishing?
Right. There are a couple of macro trends going on. So, Thad is quite right. You could take the sort of negative view about it and say it's an industry arguably in decline, flat at best, mature. Of course, all of that is true. You could look at, if you look at the true macro, you look at the U.S. economy, and I don't know why anyone would want to invest in the U.S. growing at a mere 1% a year, but of course we don't look at it that way. We look within the subsectors, and so that's certainly how we do it. So we see, a lot of disruptive trends going on. There's the shift in consumption patterns of people switching to digital away from analog consumption. And it's an almost one-time generational opportunity for new brands, or perhaps old brands that can be reinvigorated, to change people's way that they consume. And so a lot of the larger corporate folks here in the room, of course, have terrific old brands. They spend their time, I think many of you all in the room are spending your times trying to figure out, how are you going to stay relevant as the consumption patterns change. That's really what this conference is all about. And so for guys like myself, just because of the disruption that's going on, there's a number of opportunities. So for instance, spin-offs of corporate entities in which the corporation has decided for one reason or another that perhaps this brand or this particular division is not interesting to them anymore. But maybe it's interesting to us when we put somebody that has a vision and a talent behind it. Perhaps those kinds of things would be more interesting for a different set of buyers or investors. Certainly, there's been a lot of activity in the earlier stage venture space, and regrettably, much of it hasn't worked out. But you do have a very vibrant venture community, particularly here in New York now, and we don't see that abating. So we think that the amount of investment going into the space is going to actually increase, and it's going to come at it from a couple of different angles.
Great. And Balo, I suppose your experience is actually quite important here because you haven't seemed to have had any problems raising capital for Small Demons. I don't want to put a figure on it, but maybe you can digress a bit.
I wouldn't say no problems. We've been fortunate. So this was my first startup. We founded the company in 2010. We raised some money from friends and family and angels. Some of those angels are also what would be considered super angels, let's say, very high net worth individuals. They were all in some capacity connected to me, so I had a personal relationship. When we did a second round, a seed round, we had people connected to them come in, essentially, and these are folks who bridge the world between high net worth individuals and funds. So a lot of funds are doing earlier investment these days, seed level investments that they weren't doing in the past. And I used to get super frustrated in raising money because, as anybody will tell you, it's extremely time consuming and you have to do a lot of meetings and you get a lot of very similar questions over and over again. And the one thing I learned in this entire process is that the questions are actually very valid. It's just your success rate increases as you can answer them. So at the beginning, I couldn't answer a lot of the questions. And as we got further along, I remembered, okay, that's slide 6 in the standard deck. I now can answer that. And every time you can go back and answer something, you increase your chances. It also helps having people who are receptive. And the very last thing I would say is I don't agree with the pessimism at all. If you look at Facebook, Facebook's next growth dimension is in turning private experiences into stories, timeline, their biggest investment in their UI. So they see the future in borrowing a term from publishing and applying it onto their entire platform. To me, that's just indicative of the fact that there's tremendous growth opportunity if we think differently.
Okay, great, thanks. So I'm going to start a question with Brian here, just around the big kind of people like Google, Amazon, Apple. What impact do they have on the environment of investment and publishing? I mean, is there a fear that you're investing in something that can very easily be remodeled by those big businesses?
Right. So it's very much a double-edged sword, right? I mean, on the one hand, as an investor, you have to look at it and say, you look at Facebook, and it's going to be absolutely enormous, of course, and we can debate whether it's a $75 billion or $100 billion company, but the reality is it's huge. And so, the question is there any room left in the space after you have a juggernaut like a Facebook or an Amazon or a Google? And that would be one side of the coin. On the other hand, once you have, again, if you have the adoption of these kinds of services and technologies, so there's a knock-on effect. There's a secondary effect. So with Facebook, you have Zynga, right? There wouldn't be Zynga were it not for Facebook, really. In the case of Google, you have how many businesses that have spawned as a direct result of the search business. Ourselves in our portfolio, we have 2 lead gen businesses that wouldn't exist were it not for Google, and we're a microcosm of the whole sort of effect of that. The same thing, of course, for Amazon and any of the other major things. So I think that, you know, we have to learn as investors how to evolve as not only the technologies evolve, but as the adoption of the technologies evolve. We have to learn how to adapt, not only from a competitive landscape with the bigger guys, but also what can you do in an adjunct capacity. And I would make the argument that you know, if you look at it holistically, you know, the whole thing is bigger than it would be were it not for these kinds of companies.
Thad, have you got anything positive to say on that note?
Yeah, on that specifically, when we used to sell software companies or go out and fund software companies, the one thing that we always watch for is if in the software's VC pitch or investment pitch, they said we're going to be competing against Microsoft, we sent them out of the room at that moment, because nobody wanted to hear someone who had it as a core piece of their plan that they intended to compete against Microsoft. And I think you could probably take that forward. I met with a startup last summer who said we're going to be competing against Facebook. And I said, no, you're not. I'm sorry, you're not. Oh, yes, we are. Okay, well, they're not. They're still trying to. Now, on the other hand, you recognize that Facebook, Twitter, Google spawned this enormous set of opportunities, an ecosystem. We're going to blend into that ecosystem and take advantage of that ecosystem. Absolutely. We've found this aspect of the ecosystem that they're not focusing on that we feel we can uniquely leverage. Fantastic. Because then not only are you riding on the waves of so much that they're doing, you're immediately right in their crosshairs for either extinction or acquisition, and that can be played out well according to some reasonably well-established rules at this point. So that part's really positive, but you have to be very mindful, I guess, of those major players and how you position yourself vis-a-vis the big gorillas.
Christoph, how does it feel being in Germany and conquering Europe, and then how do you conquer the rest of the world?
Well, the beauty of the web being a large distribution platform, and now specifically the mobile internet being as fluid as it is today, is that we will see actually businesses come out of places that we haven't expected them. I'm involved in a company called SoundCloud, which is now building what you can describe as a YouTube for sound. You look at a company like Tumblr. Who would have expected a company like that to come out of which is based here in New York? So, I think there is a fallacy and a danger in underestimating the power of innovation. And that applies to this industry, this storytelling industry, where there will be opportunities from monetization to brand building to building something that will disrupt Amazon. From all practical purposes, the fact that now ebooks are being sold digitally, Amazon opened a Pandora's box. Before that you had to build a warehouse. Now you don't. So I expect to see more diversity rather than the temporary monopolistic type of structure we have today.
Just a minor clarification here. When you, for example, talk about the opportunity around Facebook, I'm as awestruck as the next person, about what's going on there. Google, for everything that they've already achieved, how much more and their missteps, sure, but still, how much better Google's gotten in the last year. Fantastic. The note I made as we were talking here, and the first step is the blurring definition of publishing. And the only thing I'm trying to talk about is the people who are moving into this space with a traditionalist approach to what publishing is. If you come in and say, we've got a publishing startup, and define it vis-a-vis the magazine industry, the newspaper industry, the book publishing industry, that, I say, is very tough to fund. If you rethink the whole proposition, a la Facebook, for example, or, is Twitter a news site? Yes. Is the newspaper industry going down the tubes? Absolutely. Is Twitter fabulous? Without doubt. They've rethought the news proposition. So in that sense, It's just that I was coming in with that definition, and the startups that I've been dealing with are coming in with that definition, and I keep hoping that I can say, I think this is going to end well, but it hasn't as yet when they come in with that definition.
Vala, just if you could pass the mic to Vala. Vala, do you think your business, because it has aspects of music, film, and books, has all a cross-media approach to it, that it's helped your fundings?
Yeah, no, well, I'd like to get that back to the book, actually. So I just don't share this pessimism at all. You know, the examples, Twitter, Facebook, and all these are nice, but these are not narrative-first enterprises in the sense that the people at this conference are narrative-first enterprises. So we start with books. We think inside of books and stories there's lots and lots of possibilities that aren't being tapped yet. And I love the fact that there are great big players out there like Google and Amazon, because it makes life very easy for me. So I look at Google. I'll give you a very simple example and then how we actually implemented it on our site and how we use it in our business. I look at Google, and Google has a motto that says, do no evil. So I decide I'm going to do evil. And on our site, you can find all the drugs mentioned in all the books out there, find all the guns and all the illicit things, and we don't censor any of these things. So if you're reading a book about a guy who happens to be a very successful cop with a cocaine habit, Small Demons, smalldemons.com. If you're reading a book about a character who's got a cocaine habit and is a great detective like Ken Bruin's Jack Taylor series, you'll get all the drugs. You're not going to find that on Google because Google has a different point of view about things. Amazon is a retailer, so we have a ton of stuff about locations because Amazon is not interested in locations yet. Maybe through Living Social they are. I mean, the presence of giants makes life so much easier because you can maneuver around them. And that's frankly what a startup is supposed to do.
Good. I like the fight back, Vala. That's good. Henrik, just on content, are you finding that the kind of media industry, do you think people are kind of wrapping up what would normally be seen as narrative-first projects as being something else in order to try and get funding in that sense?
I'm not sure I understand the question.
I mean, do you think that in terms of business models, people are claiming something that would have predominantly been seen as a publishing model, but actually repackaging it as maybe a media industry or something instead?
Yeah, I think there's a big difference between starting something from scratch and then running a big business, right? Like, I think some of the questions that you're posing, they allude to this notion you sit in a boardroom, you identify a market, and then you go after that market, right? That's not how us startup guys do it, right? We don't sit and have a big market analysis and then kind of go for that. Often we identify a very specific user problem, and then we are passionate about that problem, and we think that we can create a solution. Our biggest risk is seldom if it's a $200 million market. It's, can we sustain our business for the next 8 months? Because that's kind of one. So I think to your question about how do people finance, I think financing is incredibly difficult. I think the problem is, of course, that there's no logic behind investors at all. You will come into these gentlemen and they'll be like, oh yeah, my daughter, she likes to read, so therefore this must be a big industry. And you go like, really? So I think, it's very tough to have an academic approach to how you fundraise because it's in a very emotional thing. What we tend to invest in is basically spaces that we think are interested, but a little bit more narrow than kind of the publishing. So, I really like the notion of the storyteller. So tools that makes people look more creative than they are. So Instagram basically took people who were pretty bad at taking pictures and make them look better. Like they became storytellers in that, right? And then you hire great entrepreneurs, like people who are a little bit contrarian, but they also have social intelligence enough to get people to kind of follow them in their contrarian views. And I think that's kind of our approach in what we invest in, more so than saying, content or publishing or these very high level, because I think they're very tough to use as a good data points for investments.
Okay, we started late, so I'm going to move to questions if anybody has any questions from the floor. Anyone? I've got another question if there's any. Just around the international aspects of the market. So, Christoph, I suppose starting with you, what distinctions are being made between Europe-based organisations, or does everything have to be global now? Will you only invest in something that's got a global offering?
Well, there is Yes, the answer is yes. In most cases, there are few exceptions where a business makes sense on a local basis. I mean, but I'm particularly interested in business that try to reach out, in particular being based in New York or in Europe, but try to do something that ultimately will have a global appeal. I mean,
Thad, do you think there are big differences between what people are investing in here or in the rest of the world? Like
all of the work
Kobo
I've done, starts off in the United States. The Canadian side of me is an appendage, so I don't think about that much. And so we always start, United States, Europe, Asia, and I don't see any change. From a U.S. perspective, you've got to build the base here first, regardless. I mean, the global consideration is presumed, but the need to set down the really solid foundation locally initially, where locally means the United States, not New York, that still stands for me.
Yeah. I agree. I think it's pretty borderless once you get going, but they tend to be started more here than elsewhere. We have seen activity in Europe, of course, but most of the investment activity, particularly in the earlier stages, is here in the U.S.
I guess the only counter I would say to that is that I think it's very true for into consumer business products. So, I think SoundCloud has done an incredible job of being a German-based company. Two Sweets, isn't it really, based in Germany, reaching an international market. I think what I do see, though, is the more you get to business application, you do need footage on the ground, and you do need to kind of go out and do the PowerPoint in front of people, because what is becoming increasingly difficult is not as much for us to build the products. We can build digital products incredibly quickly. What's very difficult is distribution and sales and marketing, and that often requires you to knock down a few doors and speak the language. Like, it's tough to, as an American, to call up a German company through the switchboard and then do a sale to a VP of engineering over the phone.
And just going back to the earlier point, I can't remember who made it about it being content-focused rather than tools-focused. I can't remember who said that, sorry. But traditionally, content was always seen as the sort of poor cousin to technology in terms of being a scalable asset. So do you think now that content is being deemed more as a scalable asset? I mean, Vala, do you think in terms of your users, I suppose, are your scalable asset, aren't they?
I definitely think content is the scalable asset. So actually the problem is that to date, technology has been overpowering content so specifically in this area. So I'll give an example. If you want to find something new, there are great technological ways to do that. People who bought this also bought that. People who rated this also rated that. Liking and the like, those are all technology driven. But if you want to actually find something out of context from within culture, very hard, because Google has a lot of information about what's inside books. Amazon has a lot of information about what's inside books, but nobody has really used this context and the content itself as a way for discovery. That's what we're trying to do right now, and when you do that, you get a totally different view of the world than what you get from a pure technological determinism based on shopping cart behavior or thumbs up and thumbs down, which are both very shallow. So I think content is going to have a great resurgence, especially as things go from print to digital, where you can actually do interesting things with them.
Christoph?
Well, I think the opportunity to build a new franchise is just so much bigger today. I'm going to take an example, maybe a bit shocking, is Angry Birds. Angry Birds is today going after Disney as an integrated, content-centric franchise, and that happened on the back of a silly game. So these are the kind of surprising stories and developments that makes this so exciting.
Yeah, and I think if I can add, there's two elements. One is that I think that what it changes also the production cost of building, which I also think have meant that you can operate different types of businesses. So, I've heard in LA there's a big growth in these YouTube studios, which basically is a much smaller group of individuals that create something, put on YouTube, and make a pretty decent living of it. Now, they by no means is making the same amount of money as Disney and Viacom are doing, but they're creating a very nice business in those small installations. I think the other thing that you will see increasingly is that you used to have this world where you had basically content providers that was often generated eyeballs. They converted over the advertising industry to commerce, right? I think what you're seeing much more of is that the commerce providers going like, hey, instead of basically losing 40% of our budgets in the middle, why don't we just start to produce some of the sales? So you have Red Bull that start to do very big content. Even we have one of our portfolio it's called BarkBox. It's a subscription service for dog owners, and one of the things that we've done is we commissioned 12 episodes of these 1-minute animation about Hugo, the dog who lives in a shelter, right? And I think what we find is that we can produce that and get much more eyeballs on that it would cost us to buy the same type of traffic.
Yeah. I agree with what's been said. I have really mixed feelings about this question of content. I mean, it used to be the model was really well understood. So, if you were a writer, you'd go and apply to a publishing house. You'd either get published or wouldn't. Maybe you got distributed widely. Maybe you didn't, depending upon how big the audience was, how high the quality of the content was. Everything is now turned upside down. So, of course, anyone can write anything at any time and publish it, whether it's on a blog or elsewhere. So it's unlimited content, but of course, we all gravitate to read the and consume the things that we find of the highest quality, perhaps at the lowest cost or perhaps at no cost. And so you can look at all the different media, whether it's whether it's the publishing space, the film space, television, everything, every single aspect is getting disrupted. The whole distribution chains are changing as we sit here, and will continue to change. And so I ultimately think. So I think at the moment, the technology and the distribution is increasingly important. I think as the dust continues to settle over time, I think we'll go back to where content is king again. But we're definitely in a transitioning time.
One of the things that strikes me is that we fail to differentiate original content from remix, and where remix is very well established in non-verbal media, it's not as well established in print media. And Vala's startup, I think, is a very good example where you build on strong original content, a published novel, a classic, and using algorithms where necessary, it's supplemented with editors, you create strong additional iterations of that bring in whole separate audiences that wouldn't come into that content otherwise. And if you really break it down, Reader's Digest was the original content remixer, and they were very, very successful. Well, much content that's called original is in fact a remix and augmentation, which again was Ted Nelson's idea in the original hypermedia. I think if we embrace that, there was sort of an embarrassment. Oh, it's not original. Well, we're not talking about content farms. Those are the bastard children. We're talking about rich algorithmic exploration of the depth of meaning in that content, and then reworking that, reimagining it into all kinds of different forms that are not necessarily just print focused. And that's a very rich and promising future.
Excellent. Any questions? Yes.
For startups that are trying to support publishers as they move into this new space, where do you see interesting needs as far as helping them navigate the challenges and capitalize on the opportunities? Are there certain tools you think need to be built, or do you see startups starting to answering these questions, coming up with these, or do you see great tools there?
So just in case anyone couldn't hear that, what tools are available for startups and in terms of advice and...
Well, really, startups supporting the publishing industry. They want to build things to support them through the transition.
Okay.
Software tools?
Do you mean software tools?
Yes.
Yeah.
To create stuff.
To find your microphone.
What tools do you see needed by publishers that are transitioning from traditional to digital?
What are the gaps in the tool
Okay, so are there opportunities for startups? What are the gaps in the publishing industry at the moment?
It's a tough one.
Well, I'll try. So, I mean, one of the things, if you imagine a world where everything is digital, one of the big question that we'll need to is content discovery. How do you lead someone to the tool? And it's digital marketing. So it's the type of thing that you are doing. So this will be. I mean, there will be a whole layer of activities that today are done in the physical world that needs to be done. That needs to be done in the digital world.
Yeah, you asked a fairly specific question. I'll try to give it a general answer. So, if I rewound the tape back to 5 or more years ago, so if we owned a publishing business and we wanted to accelerate the digital growth of it, we'd have to basically hire a CTO and a staff internally and spend countless millions of dollars, hundreds of thousands or millions of dollars to develop whatever it would be, whether it's a website or an app or an HTML. And the tools, I can't specifically say what's missing, but I can tell you that the tools to do these individual, if you look hard enough around the world in various technology centers, it's amazing what you can find of these little vertical technology businesses who have developed exactly what you want. And the hooks that they have, just because all the technology has improved, the layers, the stacking of technology has improved so much. So you now, as a publisher, for thousands of dollars or tens of thousands of dollars, who would have thought that you could develop, an iPad app for tens of thousands of dollars, which you can easily, readily. You could spend millions still if you wanted to, but you certainly don't have to.
I have a really short answer, which is if you, in your business planning, reach a point where you think technology is blocking our progress to make X happen, you've made a terrible mistake. Technology is not the problem. It's in place. It's people understanding how to use the available technology. The point you were making, Henrik, of and you're making this too implicitly, is that
I was making most.
is how much we can leverage. It is a completely new generation, and technology is no longer the barrier. It's all about assimilating the capability of the technology and getting a first mover advantage.
So at the front here, sorry.
Hi, my name is Rafiq Ahmed. I'm with a startup called DemiBooks, and we have a platform on the iPad that lets you make interactive books. My question is, as a startup in publishing, it seems like a service-heavy industry. Aptera last week acquired Twitter for a decent multiple in revenues. I don't know the numbers necessarily, but do you see startups needing to make a decision between service versus tech? Because, venture capital 101 is keep it clean and stick with the technology, don't talk about services, but it's kind of hard not to have some services around your offering. Any thoughts on that?
Maybe I should. Go for it.
So just in case anyone didn't hear, it's about whether or not publishing is a service-heavy industry.
I think a startup has to do whatever they have to do to make sure that they can pay payroll and keep the lights on. So, I think universally there's no good answer. I think the issue that the publishing has is that you often have to serve many kind of masters, right? Like this is the same for any type of platform you're trying to build. If you have content owners on one side and users on the other side, and sometimes you might even have advertisers kind of on the third side, and then you might have technology providers. You have a lot of people that you have to make happy, and that is a very complicated product developer's nightmare, right? So in general, I would say less so like think it as a service, think more about how do you reduce the amount of masters you had to service with your product, and then make it very clear that you don't have to do jazz hands in between few. Because, for example, if you get into the middle between having to keep publishers very happy and authors then also, and then users on the other hand, and you will have a lot of complications where your product will be the one that would often let either side down at one point. And there I find like it's easier if you just very clearly align yourself with one of the sides.
Yeah, I agree with that. But I think you have an opportunity. You start the company, you build the technology, you hit an inflection point where you decide, did I just build a technology company that I'm now going to sell the technology, either outright or lease it or franchise it or something, or do I now start hiring sales force and get into the service aspect of it? So I think you can. I think it's what he said.
I think we've got time for one more question. So this gentleman in front.
I'm Eric Hellman from Bluejar. A lot of startups have to place a bet on one or two of the big three, meaning Amazon, Apple, and Google. And I was just wondering if we could go down the line and say which of the one or two of the big three you would all bet on.
Okay, so as a hypothetical startup about to make a bet on which of the big three to back, which one would you back? Tough question.
Honestly, I don't think it matters. I think you can create a great business supporting any of them.
Well, I'm betting that the world will not be totally dominated by Amazon.
Right now, I actually favor Amazon, not because I like them, only because they are doing, it's in their, as they say, DNA to try and make other partners successful, because they have figured out the win-win better than the other two players have. So Amazon supports successful entrepreneurship within its umbrella. It doesn't view your success as that they've lost anything, where Apple still is very schizoid about that, and Google just can't figure it out at all. So just on that basis.
Yeah, I think your question, if I nuance your question, the question is how to prioritize, because you're going to end up having to do all of them, right, to be universal. So the question is, which one do I do first? And you have to look at what your vertical is and where the biggest market, where am I going to get the biggest market, the biggest bang for the buck for for the dollars that I'm spending, and then that'll determine which one you do first. But I think ultimately you got to do them all, really.
Oh man, I'm not going to answer this one directly. I'm just going to tell you that two things. One, we like to learn from all of them. So we look at books like data the way Google does. We design and try and design user experiences the way Apple does, and we try and create discovery in a better way than Amazon does. So we try and take inspiration from all of them. I don't know about the placing a bet, because I think these guys leave so much room for opportunity and growth and things that they don't do in areas where they compete. Just open up so many areas where they're not. So, and I just can't answer that one. Sorry.
I think everyone was very diplomatic then. Very good. Okay, great. Just to thank the panelists, so Vala Vakili, Brian Rich, Thad McElroy, Christoph, I forgot his surname, sorry, Christoph Main, is that correct? Mayer, correct pronunciation, and Henrik Vedlin.
Thank you.
Thank you.